So it is Wednesday, 9 o'clock. Leon and I are coming to you from Investing Education Academy. So we are using a slightly different setup. So if you can let us know you can hear us okay, you can see us okay, we would appreciate you dropping a comment in. And today we're going to talk about cybersecurity. When we're talking about cybersecurity, it is a huge market in the cybersecurity space. With my research with Stockwatch and Stock News Network, it's anticipated to be a $42 billion industry as it relates to spending. So I'm going to be very specific. $42 billion as it's related to spending this year alone. That's a $5 billion increase from where it was as it relates to corporate spending just 2 years ago. So there's a lot of opportunities in this marketplace, and we're going to talk about them. So with that, you are here with Leon Simpson. We're going to dive into it. If you're listening to the podcast, we'll explain everything. You will enjoy the ride as much as the people who are watching this live. So Leon, if you want to give them an update on the topic today.
Yeah, so today's topic, like Brent said, is going to be on cybersecurity. And this kind of came about because Brent and I were just having a general conversation that had nothing to do with this. And he came up with the idea that, hey, cybersecurity, and it's based around the whole thing with COVID, everyone now being home. And the almost like it's almost like a new market, a new opportunity now for cybersecurity firms, because they now because now basically what's happening is a lot of people are working from home, right? A lot of you watching this, a lot of people at home are now working from home, when before everyone worked in an office, central office. So prior, cybersecurity firms only had to basically secure a company's headquarters and maybe some satellite offices. Well, now with the advent of COVID and this whole like work from home thing, they now have to not only secure either offices or partial offices, or some offices are even closing down. That business may go away to some extent, but they now have to secure individuals' homes, right? So they have to secure their home network, their home Wi-Fi, and their personal devices, like their personal phones. They may also have a work phone, their tablets, things like that. So the cybersecurity market is actually shifting underneath our feet as this whole pandemic has hit. And Brent, if you could throw up slide one. Yep. So what this is going to show is basically come to this, and everything we're going to show tonight on these slides are pre-COVID, right? So every number that you see, you can actually add probably a few percentage points to it, or a few maybe a few $1 million to it, or $1 billion to it, because this was pre-COVID, right? So okay, so what this here is showing, this was a question done. This was a survey done by Verizon back in 2009, actually a year ago in 2019, so pre-COVID, and they were asking, what are their biggest worries about mobile devices in their organization, right? And as most of us, would think, and it makes common sense that the biggest worry for a company would be employee-owned devices, right? So, our cell phones, our laptops, our tablets, things that we have on our person that we carry around that may or may not be secured by our company. I know when my last job, my personal phone, I had the option of getting it secured or not secured by my company. It was Accenture. And I chose not to, just because, I just felt like they were in my business. But, some companies allow you to opt out of that. So that's an unsecured device that someone may be able to do actually company work on that's not secure. Things like check email, respond to messages, maybe even look up, PDFs and things like that on a company's site. So the biggest fear companies had pre-COVID were employee-owned devices, which makes sense.
Yeah,
the next one,
Leon, real quick, go ahead. For anybody watching and listening to us, the chart we have up right now is just showing mobile devices for top organizations, and it's showing the mobile devices that are employee-owned, the mobile devices that are company-owned, and IoT devices. And right now on the chart, we're talking about employee-owned devices being 26% of all the mobile devices in the company. 15%.
Well, no. Actually, no. This is saying this is their worry. So
the worry. Okay.
Yeah, the biggest worry was 26%. 26% of respondents said that their biggest worry was employee-owned devices. So what we're looking at here is so the percentages I'm going to name are the percentage that a company worried about those particular devices. So 26% of employees responded saying their biggest worry was employee-owned devices, like personal cell phone.
Real quick, can you explain the chart? Just the chart, just what it looks like.
Yeah. Okay, so the chart's broken up into three sections, right? So the four sections further to the left is showing employee-owned devices. The middle portion is company-owned devices, and the far right are Internet of Things or IoT devices. So I'm starting from the left and going to the right. So the again, the biggest worry by companies, 26% of respondents said the biggest worry was employee-owned devices. Right, makes sense because those devices may or may not be secured. The middle portion is company-owned devices, and the biggest worry that was from 15% of respondents. To me, that was actually surprising because that to me tells me one, companies weren't securing their company-owned issue devices like cell phones or laptops, or if they were secure, they didn't have much faith in that security. Because to be worried about your own devices speaks volumes to a company's security. So company-owned devices was 15%, and then the last 8% was Internet of Things or IoT. So that can be anything. That could be a laptop, tablet, cell phone, iPod, anything that can connect to a network that can be connected to the company network is a worry. So those are the big three. And this is interesting because again, this was pre-COVID, right? So pre-COVID, when employees were primarily going to their offices, bringing their own cell phone or the company-owned device, their biggest worry. So these numbers here add to about 50%. The other 50% were things like the company network, company servers, things that don't really relate to us as individuals. So that's why I just focused here on the devices that we pretty much use every day. So 50% of companies' worries were devices that are controlled by their employees. Again, this is pre-COVID. And so the point is that this is pre-COVID, right? So imagine now that now that everyone's working from home, right? So all our cell phones, company issued or not, that were not secured before, are even more of a problem now for companies, because before, if you went, like 90% of your work was done at the office, right? You may have done some work when you got home, maybe some messaging, maybe some email, things of that nature. But now that you're home all the time now doing your job, your company work, 100% of your work is going to now be done on probably maybe a personal laptop. Some companies are issuing their employees working from home now, they're issuing them equipment. Some aren't. So some people are actually still using their own personal laptops and their own personal cell phones, right? And these are things before that the companies did not have to worry about securing before, but now they do, because you're going to now have millions of employees that actually be working from home now. So
and
companies
also to just jump in, is you have to think about the fact that not only are we home, but the hackers are bored. And not only are the hackers bored, the reality is there's a lot of people in this world, we're talking about still unemployment of 40 million people over a 4-month span. There are a lot of people who are desperate to figure out how to get money, and it's by any means necessary for a lot of people. And so you start thinking about this, what makes sense, it goes back to what makes sense. And right now, this environment where you have to protect your devices across multiple platforms, across multiple geographical areas, it becomes what companies are providing the best cybersecurity that actually takes away this worry. And the reality is you're never going to take away the worry, because even before it was just like a pure worry about, they're working from home. Is it secure? Is it not secure? Who's in the house? Who has access to the devices? Even if it's were protected, we talk about corporate espionage and all these things as if it's just on TV. It's a very real thing that sometimes people in your personal space are like plotting against you. And these companies know, okay, if I had I used to be a stockbroker, right? And so if I had to make trades, when I first started in my industry, I had to make trades on a server, and it had to be inside of like the pit was what it was called. But you couldn't do anything. You actually had to put your phones in a little bin when you got to work because everything was secure. Now you're talking about the fact that people are making trades, and the grand trades are done very differently now. But on their phones, they're having companies that deal with $1 billion deal or $1 billion company, and their books are open. And you have your wife walk around, maybe your brother, maybe a cousin, who knows? But the company can't see them at all. Mm-hmm. So cybersecurity is becoming extremely important. And in addition to the fact that these are like again, we're talking about this chart. This just shows worry about, the worry being 26% of the employees own devices. That was pre-COVID, like Leon's saying. So it's not just the fact that there was worry before, it's also the reality that there's desperation in the air. And there are a number of opportunities. And as we all know, humans are opportunistic. So that is a bad combination, which presents great opportunities if you're investing in the technology and you're looking at, well, where does the benefit lie for me if somebody's hacked?
Right. And that's a good point. I didn't think about that. Like people that are in the homes, like people that have kids, they live with, different family members. They may have friends they live with. They may, rent with different people. And those devices that were their own personal devices, by default, if you're working from home 100% now, by default, your personal device now becomes essentially a company device because you're going to do work on your personal cell phone. And then like this chart is saying, 15% of respondents also were concerned about company issued equipment like laptops, phones as well. So that speaks to the security that those companies actually had on those devices. They either didn't believe it in that much or they knew it wasn't that great, right? So this chart is just showing you the pre-COVID worry companies had about devices in our hands in the everyday. Now, Brent, if you go to chart 2. Okay, so this is showing the market, right? So this is showing how explosive this market actually is. So looking at last year, the market did about and this was in billions of dollars. So what we're looking at here, this chart, it's a bar chart from left to right, just showing the increase of the revenue for the cybersecurity industry, right? So looking at last year,
and it's global too. I mean, this chart is from Statista, and it's a 2020 chart, and it's going from global security market forecast from 2017 to 2023.
Mm-hmm. Yep. So if you look at last year, 2019, the market did about $1.67 billion, right? This year, it's estimated to go to 1.84 billion. 2021, you're looking at it jumping to 202 billion. 2022, you're looking at 223 billion. And by 2023, it's looking at to be about $250 billion. So this is tremendous growth in the market going out, just out to 2003. And like I said, again, pre-COVID, right? So these numbers are pre-COVID. This is prior to millions and millions of Americans now working from home. And I just want to say a point on that. So I read an article yesterday or the day before that actually it was an article about they were questioning small businesses and big businesses. And companies are literally letting leases lapse, right? So there are companies that had leases. So this is the middle of the year. A lot of leases that were actually coming due right about the time, June, July, that were going to lapse. They had to either renew or let it go. Hundreds of thousands of companies are letting their leases lapse. There are some that are due next year. And this article said that they're actually going to let their leases lapse next year. And what they're not doing is they're not pressuring their employees to come back to work now. They're saying, look, if we can go back by the end of the year, great. Maybe early next year, great. If we don't go back at all, we'll just take the L, pay the money on the lease, and then have it lapse next year. So companies are literally taking an L on their leases because one, of their employees are scared to come back, and two, they see the kind of long-term benefit of not having central offices when their employees can work remotely, and via things like cybersecurity, there are ways to actually secure networks and devices.
And for those of you who are thinking like, why would a company let a lease go? Because I know some of these companies have 200 plus employees. So they had a large lease space and they're just letting buildings go. And the reason is, even when you calculate, and we actually early on, if you follow Investing in Education Academy, we talked about this like in the first 3 lives, the fact that how were companies actually becoming more profitable in this time, because not only were certain companies poised for this, but they were cutting down on their business overhead expense. Mm-hmm. The business overhead expense, the building is one line item, right? The money for the lease. But then you have the trees, you have lights, you have parking. If some facilities, especially when you work in cities, paid additional for parking. You have the computers, you have all these things that they no longer have to pay for. And I'm pretty sure many of these companies, after the fear moved away and they start settling on looking at the numbers, they start realizing that, okay, they're going to building lease, but all the additional costs, maintenance, cleaning, these things go away. And for a big building, cleaning could be tens of thousands of dollars a month. And so some of you all might be thinking, well, it's not always going to be like this. They're not just going to let these buildings go. Yes, they will, especially when they get down to the business of it and look at the numbers. And now the question is, with this cybersecurity market growing, what happens when all these employees are not only scattered throughout the city, but now they're scattered throughout the world? Because some people have, relocated as a result of what's happening in the U.S. and they still work for these companies. And I know personally, like we've seen people who have received those letters. I mean, we have people inside the Investment Education Academy membership now who've shared stories that their employers have really sent them letters saying you don't have to come back ever if you want. And if you just let us know now, if you plan on coming back in 2020, it's your choice. And so it's going to be a very real thing in the future. If you're watching this, we hope that you're paying close attention. If you're listening to our podcast, because this is going to be the podcast you're going to go back to. Hopefully you won't, but you might go back to and go, I really wish I would have listened to those guys because they were ahead of the curve in regards to where the money's going to flow. And so just understand, and we're not even talking about 5G yet. We're talking about relocation, reallocation, relocation assets. So it's about the game is going to change. Servers, the way things are processed is going to change. So yeah, we can jump back into the chart later.
Yeah, I mean that's real. It's real. And last point I'm going to make about this. So just on this chart, so what we're showing you here is the explosion in this market, how it's growing year to year, year over year, over the past 2017 through 2023. Like we said, in another 3 years, it's expected to be a $250 billion business. And again, this is prior to COVID. And one point I want to make about, again, the security. I don't know if most people know, but when you're at home and you're using your, if a lot of, I know mine is, a lot of people's cable is provided by your cable provider, right? What a lot of people don't know is that line coming to your home is actually shared by essentially your neighborhood, and it could actually be your subdivision. So there could be hundreds or even thousands of people sharing essentially one line. So now imagine the worry now for a company, maybe a financial company, or a retirement company, or even a bank or something. You have people's personal information and sometimes regulated information flowing over shared lines. So if I knew what I was doing, and I live in the same neighborhood as Brent, and I knew Brent worked for XYZ Bank, if I was a hacker, it would behoove me to maybe try to hack into Brent's network, because again, we're sharing a line. We're sharing that pipe, then it's split, but ultimately we're sharing one line. So that's really the fear, that's really the worry for a lot of these companies when people are working from home, that a lot of these lines are shared because they're provided by cable companies. And this is a huge opportunity now for these cyber security firms to then, it's almost like another market that's opening up that wasn't there before. Because again, nobody's working from home. These shared lines weren't a worry, but now they are, because again, you have multi-millions of people that are going to be working from home.
And you go back to economics, right? It goes back to basic economics. If somebody has a need to sell something and they can sell your information on the dark web, and all of a sudden they can provide for their family, they're going to do it. I mean, we wish that the whole world was moral, but we already know that's not true. And so think about what's happening even with Zoom. When Zoom first hit, and Zoom was one of our first picks, we're going to share with you all our picks at the end of this. But Zoom was our first picks. Zoom has seen tremendous growth. However, Zoom has also created a bullseye on its back for hackers, to the point that they changed their whole system on how you just enter a meeting. And that required them to change some of their UI. It required a lot of technology behind the scenes to get them to a point where they were more secure for their end users, because cybersecurity and those individuals was a very real thing. And so they spent hundreds of millions of dollars to fix these things. And this is the beginning.
Right. It's early. So just a quick recap. The first chart showed the worry by companies, again, pre-COVID, the worry by companies about the devices that can connect to their network. 26%, they were 26% worried about employee-owned devices. 15% were worried about company-owned devices, which to me, again, is kind of shocking. And then 8% were worried about IoT, or just any device that can connect to their network, be it a computer, a laptop, what have you. So roughly 50% of companies worried were devices that were basically in the hands of employees. Again, this is pre-COVID. So
And
Brent, you go
Leon,
to
real quick,
go
when you
ahead.
say you were shocked by that, it's or surprised. The reality is, on the flip side of all this, it comes the lawsuits, right?
Yeah,
So, we talk about companies losing information, data hacks, social security numbers being sold on the dark web, people tapping into credit on other people's name because it was a leak. So it's not surprising, really. These companies know if something happens to, especially the software that's in my possession, we're opening ourselves up to a lawsuit. And lawsuit can mean loss of market capital. It can mean divesting from investors. It can mean a lot of things. So it's actually very real and kind of standard practice for to worry because they know they have a direct responsibility over the company-owned technology.
that's true. Yeah. Just one last point on this. So a point by so a report was put up by Global Market Insights, and they reported from large companies lose on average $10 million per year on cybersecurity breaches. $10 million. So you take that $10 million and multiply that by hundreds or thousands or hundreds of thousands of companies around the world, and that's multi hundreds of millions or billions of dollars. Yeah, billions of dollars per year in losses. So that's why this is a huge situation. And now with employees working from home now, they're almost more susceptible to this because again, they're outside the company's network. They can lock down and have control every aspect of it. Now they're relying on companies like Verizon or AT&T because that's the network going into most people's homes, and those networks are shared. So they have to bring in VPNs and all sorts of things. So it's a really big problem for companies, but it's a huge opportunity for cybersecurity companies. Okay, so Brent, if you go to slide 3. Okay, so what this is showing, so having said all that, so it all comes down to, okay, how can I make money at this, right? So what we're looking at here is the top.
Yeah, this is the area where you all want to share and this time
yeah.
pay close attention because this is about the money. And of course, Investing Education Academy, we're trying to show you where the money will be future. So this is a really important slide to pay attention to.
So what we have on here,
let's give us an overview.
Yeah, so the slide is a line chart, and it's a percent change line chart from a year ago, right? So it's trailing 12 months, and what it's showing, the line on the top, the red line, is showing the ETF Cyber, CIBR. Anyone can look it up. So what Cyber is, it's an ETF that tracks the cybersecurity industry, right? So instead of
for those listening who are like, what's the ETF? It's an electronically traded fund, which means that for this particular CIBR, it's tracking the cyber industry. So when we say ETF and we're referring to CIBR, it's a lot of initials, and so you know what they are. CIBR is an electronically transferred fund that tracks this the cyber industry.
Correct. Yep. And then below that is our favorite, the S&P 500, which is quote unquote the market. So what this is showing you from the past trailing months, so a year ago through today, the S&P, and this takes into account the big COVID drop, the big drop because of the virus that happened in the market's recovery. Right as of today, the S&P 500, based on a year, from a year ago to today, the S&P 500 is up about 6.5%, 7%, right? But the cybersecurity market is up 12%. So what this is showing is that the cybersecurity market is up double the general market or the S&P 500. So like we're saying that these things things are coming and this is going to be a huge market in the future. It's actually a huge market right now that's leading the market higher. So it's not a market where it's new or it's something that's risky. I mean, everything has risk, but what this is showing you is that this is one of the markets that's actually leading the market higher. It's a place where investors know it's huge in the future. A lot of them know what's what we're talking about now with the whole COVID thing. And a year ago through today, cybersecurity market is up 12%, while the S&P 500 is up about 6.5%. So the cybersecurity market is up double the general market. Very, very powerful. And again, that's where the money is made, buying these particular stocks over buying the general market.
And for some of you all who might be listening thinking, oh, well, I don't really know much about how to pick individual stocks and how do you choose what cyber stocks to buy into. When you look at a CIBR, that's tracking the indice. And although, one of the things Leon and I always say is that we're not giving personal advice directly to you, we are saying that that's something that you can research and see if it makes sense, because that's going to mitigate your risk moving away from single stock risk to say, you know what, we're in this ETF, which is an electronically traded fund, which has reduced costs from a traditional mutual fund and trades intraday trading, which is not like a normal mutual fund, which only trades end of the day trading. So you get to have this diversification instantly with only one purchase. And so if you're looking at this and maybe you're a newbie, maybe you just don't have time to track individual stocks, it's a great opportunity to kind of just explore what CIBR offers, because cybersecurity is here for it's the new norm for companies to be like extremely worried about. So it's that's not even our two picks. So we're just sliding that one in there.
Yeah, so that was just a show. That was just a show. Again, it's all about how do you make money off this. That was just to show that how the cybersecurity market is outperforming by double the general market. So it's a market that's leading the market higher. So those are some stocks you definitely want to look at, are cybersecurity stocks. So Brent, you can pull up slide 4.
Yep.
Now, slide 4 is what this is showing you is actually some stocks that we found, right? Some cybersecurity stocks that we found. So we ultimately found 22 quality cybersecurity companies. So we found 22. Here we're showing 3. And later we're going to post all this and the slides and everything over at IEAmembers.com, our membership platform. And the reason I say quality is because I made the point to say quality is because inside that cyber ETF, there are 45 different companies, right? And going through my research, I saw that some of them actually weren't. So what happened was, one of them that was listed in there was Cisco and I think Juniper Networks, right? And those are ultimately
Juniper.
Huh?
Juniper.
Say what?
Did you say Juniper Networks?
Yeah, I believe I know Cisco, but I think it was Juniper too. But the reason is because those networking companies bought out some cybersecurity firms, right? So they're included inside this ETF of a cybersecurity firm. So the reason I said quality and the reason it's only 22 over the 45 that was because for me, I'm focusing strictly on cybersecurity firms that actually play in this space, not kind of like quasi or kind of do it through networking, but pure play cybersecurity firms. And that's what the 22 that we found. And so 3 of them are here that we have listed here. One is Fortnite, one is Palo Alto Networks, and the third is Cloudflare. And I mean, you can read the descriptions there, but ultimately what they all do is, like we're saying, they help companies lock down their networks and their employee owned and or company owned devices. And as we said, I mean, even before COVID, cybersecurity was huge. It's going to get even bigger now because we're going to have a lot of people working from home, working on unsecured networks that have to be secured. And it's just going to be a huge industry. And as we showed, it's outperforming the market through today, over the last year. The market is going to be about $250 billion market by 2023. Again, all pre-COVID. Personally, I'm adding another, 10 to 20 billion on top of that because of COVID, because of this opportunity now these firms will have to having to lock down people's actually their home networks. So take a look at those 3. You look those 3 up. Like I said, we'll list all this stuff over at IEAmembers.com, our membership platform.
And again, the stat I gave earlier was from Stock News, and they were talking about 30 billion being spent by corporations on cybersecurity in 2018. 37 billion. You're already thinking, okay, that's a lot of money. But in 2 years, that number went from 37 billion to 42 billion. It's $5 billion in 2 years. Increase just in corporate spending. We're not talking about overall, like the charts we've been looking at today have been talking about global. We're just talking about corporate spending in the US. And so you start thinking about the fact that, number one, UK, I believe, always has had somewhat more strict laws around cybersecurity have. But now they're talking about some of the those standards becoming like global, and even websites, right? When you create your website, many of them would adhere to UK standards, not the US standards, because the UK standards are more strict. Standards are going to change, and as those standards change, they're going to change for like the GoDaddies, the HostGators of the world, and when it comes, they're going to have to hire a company to do it. So will your money be positioned with a company that is poised to win, or will you have maybe said, I didn't think cybersecurity was going to be a thing? If you watch Leon and I, or if you're a member of Investing Education Academy, you can't say that. You can choose to get into it or you don't, but we are bringing this information to you because we don't want to be on the sidelines 10 years from now, 5 years from now, thinking if I would have made that one investment, it would have been something different. And so it's actually, this is off topic, Leon, but we had we have subscriptions to multiple platforms. And one of the podcasts I was listening to earlier today was about, it was from Motley Fool, and they were talking about the research they did for the S&P 500. And they said the S&P, like roughly since 1982, I'm going to say, don't quote me on that, but the market's been up the S&P has been up about 2,400%. If you miss one day, according to their research, in that time period, your return will go down to 2,100%. 2,100% rate of return. If you miss 5 days of that time period, trying to time the market or waiting for the right opportunity to get in, your return wouldn't exceed 1,600% rate of return. Which, of course, you're like, well, it's 1,600, but it could have been 2,400.
Right.
And we're talking about 5 days, not 5 months, not 5 years, 5 of the biggest days in the market. If you miss those days, and Leon and I, again, we've talked about this several times in different episodes about what happens if you miss the 10 most important days in the market. But I just thought that was interesting that they said it. So that's not even from us. I was like, oh, this is kind of cool. It's consistent with what we've been saying. But for many of you all watching, we've gotten a conversation from members, from non-members, people who've been thinking about joining. Like, oh, you know what? I'm just going to wait for it to get here. And if anybody plans on holding a stock for, I would say, more than 3 years, the conversation of waiting for it to get somewhere shouldn't exist if you want to buy that stock. Now, if you're a swing trader or a day trader, I get it. That part I get. That's the life you chose. But if you're talking about long-term investing, which is what Leon's philosophy is for Investing Education Academy, waiting for a stock to move on something that's going to happen for a 2-day period is overly stressful. It's not gonna play out in your benefit in the long run too much. I mean, you might save a couple of dollars, but again, if you thought it was a company worth investing in, if it does have a bad day, it should recover. So please, just when you start thinking about, okay, I'm gonna wait for these cybersecurity companies to take a dip, and I'm gonna jump in. It may not. And actually, Leon, when I saw Palo Alto Networks, that was a company I started trading about 4 years ago, 3 years ago maybe. And I kind of forgot about them until I just saw it. I was like, oh man, I remember them. They're a pretty big player in the marketplace.
Yeah,
it's kind of cool because I think I helped some people buy that stock. But yeah. So I mean, for today, if you all have questions, we're going to be taking this conversation over to Investing Education Academy. The members, well, IAmembers.com is the way you get there. But like we said, the up and running now. The conversation is great in there. We recently did the Ask an Expert, and the conversation around Ask an Expert led to revise some of the things we were doing inside of the platform. And we have another one coming up. We have another session coming up. What is it?
Yes,
hot seat? Is it hot seat?
Mm.
Okay, so we have another session coming up this Saturday. If you want to be a part of it or listen in, over to IEAmembers.com and you can become a member and you will have a seat at the table. Is there anything that we're missing, Lee?
No, that was it. Just again, reiterate the point that and I, me being the data guy, just go back and look at that chart, the graph that shows the S&P 500 relative to that cyber ETF. Again, cyber ETF is up double the market. The market is up 6%, about 6%. Cyber's up about 12%. So it's double the market. And again, inside there are stocks that are up 20, 30, 40%. Of course, there's some that are down, also 20, 30, 40%. So that's why, again, it kind of averages out. So, if it's up 12%, there's some stocks in there that are up double that. So yeah, the cybersecurity is one interest you definitely want to look at. COVID is going to make these stocks in the next couple of years be one of the leaders, as we see right now through that chart showing the percentage gain. The leaders
and
in
5G. And 5G.
Like 5G. We covered 5G a few weeks ago. and we talked about 5G and a lot of stocks there, Verizon being one of them. Yeah, I mean, Verizon is in bed with most of these companies because they have to secure their network.
Yeah.
And that network again goes into a lot of homes and a lot of businesses. So
Yeah.
it's kind of a population there.
And so this conversation bleeds into so many avenues of investing, because you even think about how many of you all have ordered something that you never ordered before simply because you didn't want to go to the grocery store or you didn't want to go to the mall. And then you realize, wow, this is really convenient. I think I'm gonna keep doing it. And that means that you're making transactions online. And that means that you need your data to be secure. That means you're putting your credit card probably into the computer more than you ever have. And we do these things subconsciously. We don't think about it, but we're thinking about it. Like, during the conversations Leon and I have, we're like, oh my gosh, think about how many people are spending online now.
Right.
And these companies are paying someone to make sure that everybody who spends with their company is safe, because if they're hacked, you know what happens? You don't go back. All of a sudden you're not going to visit them again, or you're hesitant to put your card in. And this is when COVID comes back into play. So we think about this just practically. Now you don't want to drive there. So before, if they were hacked, you might say, well, I'll just drive there. It's not that I won't patronize them. I'll just have to go in. It's inconvenient, but I really like that store. Now, for some, not all, some people are like, you know what? Then I'm not driving in. And if I can't pay online, I have to move on to the next person. So I'm replacing that company. And we have very short attention spans as consumers. So we forget to go back and, patronize later on. Like the new company that provided for me, that's it. That's who you go into the future with. So companies are putting a lot of money into making sure that retail sales are happening as smoothly as possible so they can acquire people virtually, because if they don't acquire them virtually, then they may lose that person forever.
And that's a good point. And the thing about another point about that is when we're thinking about e-commerce, like all of us are home now, everyone's buying online. But the companies we always think about are like the Amazons, the Targets, the Walmarts, as the place we actually shop, right? But as like Brent said, behind the scenes, all that stuff is being secured by somebody, by some company. Companies would not operate online unless unless our information was secure, right? So, and think about it. If you go to Amazon, you're shopping with Amazon. That's one company. But the company that's securing them on the back end is probably securing them, securing Target, securing Walmart, securing eBay. So there aren't that many players in this space that are really big. I'd say there's really, we identified 22. There may be up to like 30, but it's really like that 20-ish range that are really the really big players.
Yeah, and so I think the big five, it's like a big five that cover pretty much everybody.
Yeah, there's really like a big five, but then you kind of extend it out to about 20. But those big five and then extended to 20 are securing all these companies around the world. So when you're thinking retail, you're thinking shopping online, don't just think about the front end company you're buying from. Think about the back end who's securing all that technology and all those transactions that we're doing. They're generating billions of dollars per year by everything that we're buying online.
And what Leon just said is equivalent for anybody who wants to just digest that thought is think about the fact that you want to invest in the auto industry. But instead of investing in like just one aspect, you invest in the car that recycles the rubber for tires. You just get the car, you get the company that recycles the rubber for the tires. And that's what we're talking about. That company is not restricted to just building Toyota cars. They're not restricted to just building Honda. They can sell it to everyone. So the companies that are supporting and taking care of some of these bigger names, cybersecurity needs, they're supporting multiple people, because you know how it works in this industry. Once you get the bigger player, everybody else thinks if they can handle them, they can definitely handle us.
Right.
And you don't want to experiment with patrons' money. That's the one thing, because you open yourself up to lawsuit, you open yourself to loss to clients, you open yourself to actually financial loss and being responsible to stockholders and also people who bought debts or bonds. Depends on how you go down a whole nother thing. So anyway, the bottom line is it's very important, and we're bringing this to you now because people really need to start understanding this is going to run the internet behind the scenes. And you won't see it, you won't feel it unless something goes wrong.
Right. But what you will feel is if you're in these stocks, you'll see a very nice appreciation over the next 3, 5, 10 years. Because again, everything is going digital and everything has to be secured. Right. It's almost like food. Like you have to eat, have to be secured, right? Like it just is what it is. Like you can't avoid food, you can't avoid security online. So it's a space everybody should be in.
And so with that being said, Leon and I owe you now our stock picks. So everybody who stuck with us up until this point, we want to say thank you. And just to let you all know, live roughly about 2 weeks ago, and we have a number of people who are on the IEA members platform, and you at www.iea-members.com. If you're listening to our podcast, normally the links are on our website for our podcast site. That lead back to the membership platform. But my point is this: right now we're growing, and this conversation, like conversations like these, are happening even more frequently than they did before. In addition to that, how we're dropping some of these jewels, Leon and I in Investing Education Academy is behind some of the paywalls that you can't get behind, or you probably just don't want to get behind all of them. We did that for you, and we're starting to find out information that's sharpening us daily, which means that we're bringing better information to Investing Education Academy's platform. We talk about we've had some people say, you know what, we just want to wait and see. Leon and I aren't pitching Investing Education Academy membership because we want to make money. We have one membership platform that is $36 for the year and is a very robust platform. Like, you get a lot for $36 for the entire year. We're talking like $3 a month. And so we did that because right now we looked at what's happening from an education standpoint as it relates to our money. And people aren't getting it. And if you do get it, you get it from these quacks or people who have never been in the industry, or they're just doom seekers, and they want to dispute fear. They want to make you as scared as possible about the market so they can seem as relevant as possible. Leon and I want to give you an exposure to a community of people who tell you it's great, it's cool, just wait it out. You know, it might be better. Almost programming you not to need us. We're educating you not to need us. We're educating you to independently be able to go train your children. We're educating you to be able to go say, you know what, mom, dad, let's have this talk because we haven't talked about it before. I mean, our last conversation led us to a path between options and life insurance that then made Leon and I both go, we need to get tribes, like individual groups that talk about options trading and then talks about life insurance inside the IEA platform. And now we're expanding that out to include retirement. We're going to be talking about, 401ks, 403bs, 457 plans, KEO, because people don't really know what to do with their retirement. And right now, if you have a retirement account at work and you're not looking at it, maybe to add some cybersecurity shares of market share in that space and that allocation, you should. And for those of you all who have left your job or were, unfortunately, good job in this environment, you have an opportunity to have what's called a self-directed IRA. And in that, you can have individual stocks or mutual funds or whatever you want. And when Leon had the post up about CIBR, the tracker for the cyber industry, is electronically transacted fund, or that you can actually get that yourself. We're not programming or training that you can't do outside of us, but it's really important. And that's why I just wanted to say, really important that we change the way we relate to money. And that is what Investing Education Academy is all about. We have been engaging and being in relation with money the wrong way for too long. And it's our mission to educate 10,000 people on the right way to look at their money and to manage their money. So if I say it because 3 years from now it's going to hit, and the people who join IEA early will see us on the beach somewhere, and you're going to be like, oh gosh, they were serious. And yeah, we're serious. And it's easy to see it then and go, oh, I should have. But we're telling you right now, we know where we're headed. You're part of it. So commercial being done. I'll give you our stock picks. I will go first. Let me do screen share. So my pick today, if you all, for anybody listening, it's Appian Corporation. It's a cloud computing company, and really what they do is they make low code software.
Well, give the ticker.
Yeah. Oh yeah. So the ticker is AP. Again. Oh, you know what? I'm gonna say it's very slow because I don't want you to mix it up with Apple. It's APP. PPN. And so the ticker symbol for Appian Corporate is APPN. I said it like 1,000 times. It's right now, it's trading at $46.19. It's actually pretty cool because it's headquartered in McLean, Virginia. But what I really like about this company is they've been showing growth before COVID. It wasn't like COVID hit and all of a sudden their coding company became important. They create low-code software, and what low-code software is, you don't have to be a very strong programmer. Companies, government entities come to them and say, this is the solution we need. And Appian then gives them like already half developed code. They just need to piece it together. And it's almost like getting a puzzle half done versus all the pieces still being in the box. That's what Appian does. And that's the best way I can describe it. They're going to be in for the long haul. And one of their founders, I'm a huge proponent of founders. Mark Wilson is a beast in regards to like his business acumen. I am a huge proponent of tracking, the leadership in organizations, because although leadership can change, many factors can change in the business. But if the leadership is strong going into it, and also the amount of shares owned by the C-suite or the executives in the company also tells me a lot about what they feel the future of the company is going to be. And they still have a large portion of the company held by the original founders. So my pick is Appian. I think they're going to be a great play long term. They are pushing 52-week highs right now, trading at $46.19. As you all know, for me, that doesn't bother me at all. They've been upwards of $65. Recently, $46, $47, $50 has been their range. And they have just a huge potential to go. So that's my pick.
All right, cool. So keeping with the cybersecurity theme, my company is Proofpoint.
I was like, should I do cybersecurity?
Yeah, I was debating it too, but I was like, and I started looking at doing the research. I was like, damn, some of these need to be, these need to be in the portfolio. So, so mine is Proofpoint. Ticker symbol is PFPT. PFPT. Proofpoint. Today they closed at $115.12. They were down 1.62%. So I'm just gonna read you what they do. They provide software as a service for inbound email security, outbound data loss prevention, social media, mobile devices, digital risk, email encryption, electronic discovery, and email archiving. So, I mean, they cover just about almost everything that
really, that's everything we talked about.
Yeah, right. They cover just about everything a company would need as far as security. So a bit on their financials, and their financials are beasts. So the last 2 years, their average yearly profit growth rate is 25%. That's huge. Most companies, 25% is kind of the threshold of like a quote unquote growth company. It's usually 25% or more you consider growth. So they're right on the cusp of being a serious growth company. And their sales are even better. Their sales average of the last 2 years is 29%, so roughly 30%. So this company is, growing hugely on sales, growing hugely in profits. And again, it's a cybersecurity firm. Company's called Proofpoint, ticker symbol PFPT. That's my pick of the day.
Yeah, I think that's a great one because I was debating on it, and I chose a software company because I felt like the technology still bled into security, but it doesn't. I like your pick.
Yeah, but you ain't picking security. I got this.
No, I like the pick. I like the pick. So. And then I'm looking at Palo Alto. I'm like, oh man, that would have been a good one too.
Yeah, right.
So those are our picks for today. If you missed it, you can always catch us on YouTube. You also can catch the podcast. And what we're going to start doing is having the podcast updated. We're going to try to make sure it's every 2 weeks, but we're going to try to get it done at least weekly. At least every 2 weeks, we're going to try to get it done weekly by request. And if you are in our IA member, there's actually, you can go to, topics, and click IEA TV, and it's all of our lives organized in one place. So again, if you're an IA member, you can just go into the platform, go to topics, click IEA TV, and it'll show all of our lives. Thank you for being with us, everyone. We are going to go. Good investing, and let's get our mindsets right for an amazing future. Have a good day.
All right.